Good morning and welcome on a very early Saturday morning to Money Basics. And we're happy that you joined us. We have a few events left this week for you to participate in. We're open today at our brand new business center in Rochester, Minnesota on 2nd Street. So if you want to stop out for a tour or stop in and talk to a representative, you're welcome to do that. We also have 3 seminars going today, and Sokha Yous will be presenting them all. Sokha brings over a decade of financial industry experience to her role as our financial wellness counselor. And whether you need to analyze your credit report, make a debt reduction plan, or ensure that you're on the right path to meeting your financial goals, Sokha can help you. She's dedicated to helping members. She's a caring, compassionate member of our team. So without further ado, I'll introduce you to Sokha.
Thank you, Mary. I appreciate that. Thank you so much for being here all, and thank you for joining us online. Again, my name is Sokha Yous. I'm a financial wellness counselor here with Mayo Employees Federal Credit Union. And this morning we're going to talk about money basics. So the basics of money, we're going to talk about how to open a checking account or what needs to take place to open an account with us here. We're going to talk about the big difference between wants and needs. Methods of payment such as cash, checks, debit cards, and credit cards, and the importance of building credit. Loans, different kind of loans that we have available, but also we're going to talk about payday loans as well. And budgeting basics and scams to be aware of. And for parents, how to help your kids save and manage money at an early age. So opening a checking account with us here. So checking and savings account can help you or your child manage your finances in one place. So usually when your kids open up a checking account, you would usually have to be a co-signer, a co-owner on that account as well. So what you need to open a checking account or savings account with us, you have to be eligible for membership. So to be eligible, you have to be a Mayo Clinic employee or retiree, volunteers of all Mayo affiliated entities, students of Mayo Clinic, and any family members of those, relatives of current MEFCU account holders as well. So you can open it anywhere. It doesn't have to just be in Rochester or Wisconsin or in Jacksonville, Florida, or Phoenix, Arizona. So anyone that is eligible can open anywhere in the US. And you would need a credit and debit history. You would have to meet the requirements for that. And minimum deposit for savings is $5, so just keep that in savings account just to keep your membership going. And then you'll need at least $25 for a checking account to get started. And of course, you need a valid government-issued ID. Now, members ages 0 to 14, they require an adult to be joint and can open a savings account or a certificate. However, members 15 to 17 require an adult to be joint on a checking account until they are 18 years old. Now, parents, once the child hits 18, you do not automatically get taken off of the joint checking account. If you want to be taken off, you have to let us know to be taken off. So for example, your child gets into a negative checking account and they can't recover that, then you're going to be responsible for that as well as a joint checking account holder. So something to be mindful of. And so some of the features that MEFCU checking account have, we have no minimum balance required, no monthly fees, you earn dividends on it, free mobile bill pay and free mobile deposits. Those are very convenient on the weekends if you can't make it to banking time, regular banking hours, or just whenever you want to take a picture of your check to be deposited, it's really easy that way. You have online banking access, so you can just download the app and you have access to your transactions right away online. And some of the options for savings, you can open a savings account, a money market account, certificates. You can do both Roth IRA and traditional IRA with us as well. Now let's talk about wants versus needs. So this is really important to decipher really early on. So are you a spender or a saver? And what do you consider your necessities? So necessities will be like, should I buy a new phone that you don't really need, but you really want it because there's a new phone that's out, or should you pay rent this month? Sometimes you just have to consider one of the two, but usually needs is what you might want to take care of first. Are there any wants that cost you at this time that you can cut out that can improve your cost of living? Such as, do you really need that extra streaming services that you already have 4 streaming services, do you need the 5th and 6th one, or do you want to go ahead and just save that money and add it towards your savings account? So just think of it that way. So ways to reduce unnecessary costs. First things first, we're going to create a budget. So the budget is going to be the key word in this whole presentation here when it comes to wants versus needs, okay? And so we're going to create a budget so we know exactly how much we have left over, how much is coming in, what kind of expenses we have, and it's a great way to track everything. And secondly, you want to take a look at your debt. So in order for you to know exactly how much you have to put towards your debt or how much you have left over to put towards savings or debt, you have to know exactly how much is available or how much debt you have. You can negotiate and change or cut services. So for example, if Sprint is running a special, or excuse me, T-Mobile is running a special for new owners or new membership, new services for $70 a month, but you're currently paying $120 with AT&T, I think that's a great time to go ahead and cut services with AT&T and move on to T-Mobile. So it's just little things like that that can save you about $60, $70 a month, but it adds up in the long run. And change where and how you can shop. So if Aldi's is the best option for you at this time to save you money with groceries, then stick to Aldi's. But if you're shopping at, let's say, Fresh Time, where it's a little bit more expensive and you're trying to save money, then I think Aldi's is a better option. Most importantly, meal plans. So a lot of us spend a lot of money on unnecessary items such as eating out. So if you're eating out 5 days a week, Monday through Friday, you're spending about $10 each time. That's $50 per week. Where if you do meal plan, then you can save yourself a lot of money that way, where each meal can come out to maybe $3, $4 each meal. So to save yourself money that way. But most importantly, you have to be organized. You have to learn how to organize your time management, and also what kind of debt. Organize your debt, organize your expenses, and your meal plan as well. And then we want to talk about setting financial goals, which is really important, because once you know what your goals are, then you know exactly how much you need to budget for those financial goals and give yourself a timeline as to when you need to meet those goals. Now, which form of financial transactions do you prefer? Do you prefer cash, checks, debits, or credit? So these are some of the differences. So what is your preferred method of spending money? Debit is the easiest in my opinion, it's easiest to manage. So you can go ahead and take a look and see exactly what's online, what the transactions online is easier to track down. And if there's fraud or you lost your card, or if it's stolen, you can report it right away. And cash, you know exactly how much funds you have. Once you run out of cash, that's all you get for the week, or it's easier to budget. So if you budget for $100 for groceries for that week, and you run out of that $100 for that week, then that's all you know that you have to spend. So a lot of times if people are having a hard time budgeting, cash options might be the best option for you. And checks, if you prefer to pay with paper, it's nice for tracking consistent expenses. Just make sure that you put it in your check ledger, just to make sure you know exactly how much you spent and how much is left in there. Now with credit cards, it's another great option to use as well, but you just have to be a little bit more careful with credit cards. It can be a good financial tool when used responsibly. It can help you build your credit score. We know how important credit scores is in our financial lives at this time, so we all need a good credit score. So using credit card wisely is a great option as well, and they're easy to manage online. You can earn rewards. So certain cards you can earn rewards for travel, you can get cash back for groceries and gas. But so different rewards, whatever lifestyle that you want to achieve with, you can take a look at the rewards and get those credit cards with those rewards. But the interest rate may vary. So you can have introductory interest rates starting at 0 to all the way to just a regular interest rate of being, 22, 25. But there's some interest rates that are right in the middle of about 10, 12. But usually if you get a department store credit card, it's usually up in the 27, 29%. So be careful with that as well. But it can create unnecessary debt when not paid in full, or if you don't create a payment plan for bigger expenses. So you think that you're spending $400 on something that you feel like you absolutely need right now, and then you said that you're going to go ahead and pay it off on your next payday, but then you got sick and you missed out on a few days of work and you didn't get a full paycheck. So now you don't have the money to pay this entire balance. And if you don't pay it within 30 days, your interest is going to accrue. You're going to get finance charges, so just be mindful of that. The different type of loans, so there's student loans, which we're all aware of. That's a hot topic in the news right now. We also have private student loans here with MEFCU as well. There's personal loans, vehicle loans, home loans, and lastly, payday loans, which is very, very dangerous to get into. So a lot of people, so payday loans is making a comeback. It used to be one of those businesses that you find on the corner or, an urban area where it's kind of hidden away a little bit because it's harder to get. I mean, it's really easy to get, but it's harder to pay off because I think the typical interest rate is about 325% on it across the board. And I think it's illegal in like 10 or 12 states, which it's really, really hard. Once you get in, it's really hard to get out of. So they have access to your bank routing and checking account numbers. So whenever your payday is, they're going to take that amount out if you agree to pay the entire balance. And then you find that you don't have enough money, and then you go get another payday loan with the same company or another company, then you're in that vicious cycle. And there's a few people that I've talked to personally that have about 6, 7 of these payday loans, and their entire paycheck is completely gone. So it's not the best way to go whatsoever. If you find yourself that you need to get a payday loan, please come talk to us first and see what kind of options we have available for you, but don't do a payday loan. So that's very dangerous. But also something to be mindful of. So for example, if you buy something online and they said that you have the option to make that payment in 4 payments. It's not necessarily a credit card, but it's for like places like Klarna, like on Amazon. They said that, your purchase is $100, but you have the option to pay $25 now. 2 weeks later, you can do another $25, and then so on until it's paid off. So places like that are just another version of payday loans, so it's not really smart to go there as well. Do we have any questions so far, online or in person? You do? Okay.
What other types of apps currently are disguised as payday loans?
So I believe Chime is, I have to look into Chime, but I believe there's, I don't exactly know any of the apps, but I do know, like, if you search payday loans, there's so many different companies, but I don't know the apps particularly, though. But when you're online, you can look at Klarna, and I think there's a few other ones that are like Klarna. Yes, that's right. So that gives you the option to pay a little at a time until it's paid off, but the interest rate is high as well. It's not like low, it's higher than a credit card, but it might not be as high as a payday loan. So those are the ones to be aware of. But if you ever question what they are, you can just look it up online. It'll tell you if it's a payday loan, or you can contact us and we can talk to you about that as well. And then some of the budgeting basics that we're going to get started on, where to start. So a lot of people think they have a good budget. Or a lot of people think that they just keep a budget in their head, whatever works for them, but a lot of times, or a lot of people that come to me, it's not working for them. So it's always best to just make a list and write it down. If we want to keep our budget as simple as possible. We just want to go ahead and do just a simple, spreadsheet, Excel spreadsheet. We want to create a list of all your monthly expenses, okay? First things first, you want to know what's in your budget. So we want to go ahead and put in our income. We want to make a list of our monthly expenses. Compare the total expenses of your monthly to your income. So we want to go ahead and write down what's available left over after you pay all your bills. When those bills are due, what's left over available for savings or debt repayment. So in order for you to figure out what exactly to pay off first, you have to know what you're bringing in, how much your monthly expenses are, how much your debt is, and what's left over, okay? So the easiest way to automate savings to save money is to go ahead and automatically automate it from a transfer from your checking directly to your savings, or you can go into your payroll and have them directly save, let's say 15%, or you can do a figure, let's say $300 each paycheck directly to your savings account and just deposit it that way. That's the easiest way that I think it is, because you don't even see you don't even see that money on your paycheck, so it's not like you're missing out on it. It goes straight into your savings account. And sometimes it's best if you put in a different separate savings account than your checking account, because if you're one of those that has a tendency to transfer money from your savings to your checking account, with you going into putting in a different checking account with a different bank institution altogether, it might make it harder for you to get into that savings account. Therefore, you can elongate your savings as well. So whatever works for you, try a few different ways, but that's the best way that I see is working for people. So you want to list off your savings goals as well. With Christmas coming up, we want to go ahead and have maybe perhaps, a holiday shopping, savings goal. You want to have vacation savings goal, and what if you're trying to save for, taxes coming up and that's due in March, April time. So you can have different savings goals as well. Do we have any questions so far? Okay. So this is just an example of what a regular monthly flow looks like for a budget, okay? So we have the top part there in green, we have the income. And so let's say there's a two income household. Typically, if an RN is making $3,200 a month, we want to break it down by per paycheck, paycheck 1, paycheck 2. So for these two, their total income is $5,600. And then we want to go ahead and list off all their monthly bills at this time. So typically you have rent and you have your mortgage. Then you have your water, trash, student loans, cell phone. The typical household right now with two people working have 2 car payments. So car payment 1, car payment 2. Electricity, Minnesota Energy, streaming services, internet, credit card 1 and credit card 2. Or credit card, that was supposed to be credit card 1, credit card 2. But so these are the typical expenses that I'm seeing right now. And so it comes out, so we list a total on the right-hand side, and then on the yellow part is monthly variable expenses, such as your groceries or household expenses. So groceries are just food you eat, and then household expenses will be if you need, buy hand towels and stuff like that. And then eating out, we want to go ahead and have an expense part for that as well, a budget for that. Gas for your vehicles are here, it's going back up, so we just have to be mindful of that. So it's always going to change. That's why it's called variable, because it's always going to change each month. But this is what we want to aim for, though. You have some hobbies and some entertainment for going out as well. So I split that up over check 1 and check 2, where because you're getting paid the first paycheck, you can allocate $400 per paycheck towards groceries. And then you can allocate maybe $100 per paycheck towards gas. And then you have your savings category, so whatever savings category you want to save for. But as you can see, the total monthly income is $5,600. All of their expenses comes out to $4,900. What they have left over is $690. Over that $690, we obviously have categories for emergency savings. So you can split it up over whichever categories you want for savings, preferably more in emergency savings. So in this situation, with the total expenses, the very basic base of their living expenses is $4,900 right now. So if they want to save for emergency savings, we recommend at least 6 months of emergency savings. So that come out to $29,000. And and what they have available in their savings right now is $28,000. So it looks like they are doing okay with having emergency savings, so they can allocate the rest of their extra $690 to different savings category. Okay, so typically you have two income household, and usually have more than one checking account, more than one banking institution. So in this case, we just chose MEFCU and Wells Fargo. And then some of their debt that they're paying off, and the total debt that they have, including their mortgage, comes out to $212,000. So with debt repayments, they can choose whichever one they want to pay first, but preferably the ones with the highest interest rate should be paid first. Now, but any questions on that one online? No questions? Okay. Now, for ideas to reduce expenses, as we mentioned before, changing cell phone plans, cancel unused gym membership. Some people are, I'm one of them that's kind of bad about that. You think you're going to get this great membership, and you're just going to you try to convince yourself every morning to go, but end up not going. So it's okay to cancel that. You cut streaming services, refinance loan to lower interest rate, vehicles or student loans. So if you refinance, let's say for 3 years ago, your credit wasn't that good, but you needed a vehicle, so you got a vehicle loan, and the interest rate on that was 18%, 20%. But now your credit is exactly where you want it to be. It's a lot better. So you're going to get a better interest rate on it. So you can refinance your vehicle loan, use the equity to pay off debt, but also you're going to get a lower interest rate as well, so your monthly payments will be lower. And then ideas to put more away in savings, obviously set goals. So we talked about that. It's really important to set your financial goals. You can automate savings. You can take up a part-time job or work extra hours in your current job. Meal plan and dine out less, because we all know dining out is very expensive right now. You can carpool and avoid extra trips. You can sell your items you no longer need, like clothing items, baby stuff, and household items as well. Common scams to talk about. So there's a lot of 3 different scams out there all across different demographics. We can have, scams that are targeted towards 18-year-olds all the way to 118-year-old. So Instagram, we have in Cash App scams, we have a lot of that going on where people think that they're talking with a friend, and it turns out that it was a love scam this whole time. They ask them to send money through Cash App. They end up getting your banking information some way, somehow. They hack into it, and they start transferring money, or they ask you to deposit a check that they are going to make money off on. Excuse me. Make money off on, and now they have access to your checking account, so you lose out of all that money. So everyone is a target audience at this time. Another way to help your kids save money, some of the resources we have is a MEFCU Top Dog app, also youth and teen certificates, and once you start talking to your kids about money, preferably when you start giving them some chore money. Excuse me. So whenever they start doing chores and you start paying them, would be a good time. Help them set financial goals, so that's always really important. Whether it's long-term goals or short-term goals, if they're looking to buy, whatever game that's coming out for Christmas, and you have only a couple months until Christmas comes out, then that'd be a short-term goal. But if they're looking to save money for college, that'd be a long-term goal. Any questions so far?
What is the Top Dog app?
Oh yeah, so that's an app that we have available for our male members. So it's more mainly targeted towards kids. So you can actually just download that on the App Store. Yeah, absolutely. So we have so as Mary mentioned earlier, we have our schedule for today. We have another one about student loans coming up at 9:30, and 10:30 we have getting started in your 20s. And that concludes my presentation on money basics. Do you have any other questions? No, any questions online, Seth? No?
One online related to credit cards.
Sure.
What's the right time to get your teenagers involved with credit cards?
Preferably, yeah. So if you want to put them on their own credit card, they have to be at least 18 years old. So preferably when they're 18, so that way you can teach them the right way to use credit cards versus them going on to college campus. There's going to be people that are targeting them everywhere, and they're not going to know how to manage the credit and how to spend wisely versus if they are still with you at 18, and you can teach them exactly, paying the minimum balance versus paying off the entire balance, what it means to get finance charge and interest rate, and how and when that hits, and how building credit affects your financial life for the rest of your life. So,
What's the right age to open an account?
the right age to open an account with us here. So if you want them to be part of managing their account as well, preferably 14 is when they can get that, get their account, as long as you're a joint account owner as well. But the sooner you open an account for them, you can always have, they can always have like a savings account for them listed under their name as well for when they're much younger than that. So you can get, certificates for teens as well. Anything else? Okay, good deal. Well, thank you so much for your time today.